now. Hello everybody, welcome to webinar 7 of mentfx. In this specific one, we're just going to do some outlooks, maybe talk a little bit about algorithmic trading, talk through some questions that people drop down, and just work through the content and show it off a little bit more so a lot of you can understand what it is we do here on a week-to-week basis at mentfx. Welcome Darius, welcome Luca, welcome David, welcome Flames. Who here is new? Like, that's awesome. Welcome everybody. You guys are gonna love it, and hopefully you guys have seen all the previous webinars. If you haven't, and if you are rewatching this, even if you started a little bit further ahead, make sure you go back and watch them all. There's always questions that are commonly asked, frequently asked questions, answered throughout those videos, so that will help you guys a lot. And on top of that, we do delve into some deeper concepts, such as the mentfx block, as you all know and love now, in some of those webinars, and we just break that down. And sometimes, we dedicate 20, 30, 40 minutes or something like that, as well as mini nuggets of psychological elements of trading. And especially those that are new, be ready to learn a shit ton, then forget it all within a day. Think that the world is pretty much over, and then remember it all a week later. That's a very fun psychological thing that all of us experience here in mentfx, especially when you are bombarded by a shit ton of content. But remember, stick to the process, stick to the refinement, stick to backtesting, and eventually it will come to you naturally. Eventually you'll get to the point, as you've seen me do multiple times, even on YouTube, especially with the most recent video. If any of you have seen the public most recent video where I kind of just threw on a bunch of different markets, right? I did Forex, I did commodities, I did indices and stocks. And you saw how as I threw on random markets, I was able to go back in time, find exact entry criteria or entries that could have happened off of supply and demand zones, and go zoom in on it, and instantly we could see the same thing being shown. Weak hands being taken out of the market by way of liquidity or Wyckoff, whatever you want to call it at this point, right? Taken out, the shifts in structure, the moves right back in to give you perfect entries to take you lower. But at the same time, if we zoomed into this, which we did also on US 30 and even GameStop, what did we see? The exact same transfer of weak to strong hands. Now, if you're looking at penny stocks or stocks in general, because the market is more illiquid, you're not going to have movement that is very, very easy to read by way of every single move. So you can't just go in and be like, oh, imbalance, I want to see that get filled and something of that nature. Instead, as you become, the thing is, every market's the same and will operate the same, but because of the illiquidity in penny stocks or even in crypto or even in some stocks, you need to recognize how this liquidity creation and manipulation undergoes in multiple areas and at supply and demand zones, and recognize how it's all attributable and this basically repetitive across any market, right? That's why I could go literally right now, jump on any market that you guys put down right here, and show you this exact thing happening with lows being taken, shifts lower time frame into new highs, right? These mitigations right here acting as lower time frame mitigations of Wyckoff, right? If I zoomed in on this, you'd probably see Wyckoff in here. Now, it's not always going to be the case, right? All of you need to recognize that you're not always going to see Wyckoff that gets you into perfect entries. There's going to be Wyckoff that occurs, gets validated, and never comes back, right? Part of that is understanding that maybe this will be an area that you can use for mitigation in the near future or in the far future, right? But at the same time, you need to recognize that just because this is missed or something of that nature and prices moved quite far from it does not mean that new areas of demand or even new areas of inefficiency like imbalance, which on a lower time frame, as you all might recall, is inefficiencies inside it, right? Because an imbalance usually has stuff inside it, which is unfilled price action, that doesn't function as a great area to get re-involved in buys, right? Such as weak hands taken out by strong hands, right? Or Wyckoff, whatever you want to call it, with the last demand zone being left. Having new buys here that run with your ideas of partials, either confirmations to go lower or continuations higher, that will then in the future come to grab the liquidity below all these lows, become a larger schematic, and come into those deeper areas to either give you short-term buys into new supply zones, to either continue to completely new highs, or into new sells that might even create liquidity that comes up into this last supply zone, giving you new sells into those very, very lower schematics that have not been tested yet, right? So you have to recognize that the game of Wyckoff isn't always going to be tested, or where Wyckoff occurs is not always going to be tested instantaneously. And there's going to be markets that run from you, that you'll be able to get into on the way up. And if you understand your management strategy, if you've studied and back tested what you basically have access to here at mentfx, then it will become, basically FOMO will become a non-issue, because you realize that you can get involved anywhere and anywhere, right? Why do I look at one market? Because I know that when I open a chart, the odds of me finding a potential trade at that specific moment is very simple, right? If any of you haven't yet, especially new people that don't understand what I mean by this, watch the live trading video. The very first one, it's just live trading one. I don't have more right now. It's literally on Bitcoin USD. I did it over 2 hours, right? The second I started recording and did a top down, we found the areas where I could expect price to do something, and we're able to trade it right from there with the 5 second, 15 seconds, and even 1 second charts, right? Because what you have to realize is FOMO doesn't exist when you actually understand the way smart money gets involved, because it's a constant play of creation of inefficiency, creation of liquidity, and the transfer of that liquidity into the hands of the strong players and continuations into given areas, which you manage in line with your potential system while looking for new buys to sells and sells to buys within areas. Because guess what? Even though we all understand, even from a smart money perspective, that the market moves in whatever, higher highs and higher lows, the reality is the market moves from inefficiency to inefficiency, or from liquidity to liquidity, right? The next step of what you guys understand is to diverge yourself almost from structure specifically, and recognize that price is all about seeking inner and outer areas of inefficiencies and liquidity. That's why when I'm in a price, I don't always have to see a break in structure to confirm that something's going to occur. Instead, I'm able to already see a liquidity graph, for instance, of some kind of buy up to move down before it even breaks, and use that area as Wyckoff to get into the actual break. Right now, that's not always going to be the case, and it's going to take time before you guys get there. But realize that the market doesn't move so much in structure. And I mean, I covered this a little bit in the structure section, right? Where we literally deal with the fact that there's a very, very big difference between structure that is printed to you with the candlesticks and structure that is printed to you institutionally. Because institutionally, structure can technically break candle structure over and over again if it feels like it, but still be preset in an overall movement in a given direction, like the mentfx blocks, right, guys? So hopefully that little rant made some sense. I'm gonna start going through some of the stuff you guys said. I wasn't really reading it. I was just kind of going off a little bit. But let's take a quick little look right here. Let's take a look. Watching this until I can't forget. Thank you. Want to be having dreams about it? Yeah, that's when it becomes legit, when you guys have dreams about it. I defended you in the comments. Oh, I appreciate it. Is it possible to get a breakdown of which video we should start with in a specific order? Okay, if you're new, start with the hashtag welcome. Read all of this. I talk about how you should make use of the materials here, right? And then begin to work through it. Start here, go to section 1, go to section 2, go to section 3, go to section 4. There's not that much here, but kind of understand what I'm going at. Go through the live trading, go through the other course materials, go through the webinar recordings, right? It's all right here for you. Use the course content, use it in a step-by-step basis. And for those that are new right now, best thing I can say is watch the private shit first, then move to the public, because the public becomes that much more powerful and understandable, and you can literally predict what I'm going to say if you've seen the private. So for the public, a lot of people are confused as shit every time I make a video, but if you've seen all the private, you instantly understand what it is I'm going to talk about, how it is I'm going to analyze the market, and what setup I'm going to talk about, and why I got into it. Usually you'll be able to see that all within a video that I release, right? How are the spreads and commission on FTMO challenge? They're fine. Spreads are pretty low. If you trade the majors, commissions are, I'm not sure. Commissions never really affected me, or I never really thought of them. I haven't surfaced Wyckoff yet. Yeah, you're going to love it when you get into the section 3 then. Check out the playlist on the channel. That's probably the best way. Yeah, the the Netflix playlist. Euro USD. Oh yeah, we'll take a look at some top downs definitely for you guys. We'll look at some community outlooks. I know GBP USD played pretty well from our last outlook that we did previously last week. This is all just FTMO. Just reading through these really quick. Currently in the challenge phase, it is very good. Below 1 pip spreads. Yeah, that's very normal. You guys think it's smart to just buy? There's 2 days old new stocks. UiPath just got added to the market. Would you guys think it's smart to buy off the hype? So Andreas, maybe you're new, maybe you're not. I'm not sure. But we do not buy into hype. We do not buy into news. We do not buy into any of that shit. We trade price and only price. We use price to dictate whether or not we want to be involved, and we have refined systems in place to do that. There's always going to be markets that you miss out on, but there's always going to be markets that you get in on. Now, when you buy into hype, you can make money, and you can make it for a long time. There's people that probably have been trading on hype for 20 to 30 years, but when you trade on hype, the same thing will happen that happens to anybody. Eventually, those people that trade off hype will lose everything, and they'll be confused as to why, and then they'll quit trading. That's how it's going to be. So never buy into hype, never buy in with emotions. Always refine a system and stick to your system if you know that it works. Okay. One of the most psychologically powerful things you can know. And this is also a reason that I only trade one pair, right? I know that I am missing huge moves on other pairs, huge, even other markets, even crypto, right? All this shit, I'm missing it. But at the same time, my balance continues to grow. Okay, now the people that are in crypto and got in early that have their balance growing crazy right now, some are going to hold on. Some are going to sell off and try to buy into other markets and then lose their money. Some are going to hold on and potentially have a collapse and be back at zero until it might skyrocket again. They have no clue what they're doing, and long term, they will lose. Now, they might have a ton of happiness before that happens, but it is not a way to make yourself a full-time trader. If there's something you want to do full-time, you need to recognize that there needs to be an element of a process to what you do. Hype is never the case. Now, again, if it's a 2-day-old stock and already there's some kind of structure being put into place and you're seeing Wyckoff occur in certain areas, by all means, fucking send it. But if it's just because it's hype, then most likely than not, it's going to go to shit, especially since you, as all of you should understand, the market is a game of chasing liquidity. So if there's hype around something, more often than not, if people do buy into the hype, what happens? They get fucking railed and they get liquidated, okay? Anyone else getting some crackle throughout? Oh, some crack, yeah, there you go. UiPath is a company founded in Romania and headquartered in New York City, serving as a global software company that develops a platform of robotic process automation. Who gives a shit? If they're not accumulating, I'm not buying into them, right? That's it. I don't care what they do, who they do, how great they're doing. If you want to be a growth investor, you can be, but recognize you should buy, you should hold, and that's all you should ever be doing. You shouldn't be looking at price, you shouldn't be buying into hype, you should be buying into straight up fundamentals if that's how you want to approach a market. That's fine, but when you buy into hype, it's never a short-term thing. You have to be ready to hold this for 10, 20, 30 years. We do not buy off hype. There you go, Chris. You know what's up. Audio's fine for me. Just catch the recording if it's not working for you. Yep, exactly. Hype is what the market manipulators and strong hands want. Exactly. So you guys are making my point right here. Fantastic. The consistency you seek is in your mind, not the markets. Yep. Agreed. However, this company has massive potential with millions of users, and I believe it's sitting at number 1. That's great, but it doesn't matter. At least not for me. If this matters to you and you've done successfully in the past, buying companies off of hype and potential future, the potential for future growth, and that's fantastic. But at mentfx, even as day traders or even people that swing trade, this is not the way that we look to get involved. Could I use this with beat the market maker strategy? I have no idea what that is. I think it's that indicator based thing. Again, you can build a strategy around what we do here in many, many different ways. However, the pure mentfx way to go is probably the best way to go, because it'll teach you how to analyze a market without needing anything else, without needing to use session times, any of that stuff, because you start to understand that price is all that matters. And to prove that, if you look at any crypto market, after hours, Sundays, even on holidays, they still respect and move in line with what we would think is smart money footprints, which can only mean one of two things. And that's either that, sessions really don't fucking matter, and that smart money operates at all times. Sometimes they'll operate more often, right, than not, which is probably arguably in the London and New York sessions, especially during the normal work week, right? And you can get more movement, but that doesn't mean at all that there isn't the same thing present in Asian ranges. There's not the same thing present in holiday days. There's not the same thing present in a 24/7 crypto, right? Because as you guys know, I think 2 weeks ago, we caught the markup of XRP. That literally ran, holy shit, how much? And that started off a Saturday, right? Why was it a Saturday that it started, not Monday, right? Because price doesn't care about time. Price cares about how many people are involved, how it's getting those people out of the market, and how smart money, or the market makers, whatever you call them, are getting involved to then trade it. Can you explain that big move on USD CAD? I haven't looked at USD CAD, but let's take a look right now and explain the move. I mean, you had the same thing on gold. Why did this big move happen? Now, I didn't catch this because as you guys know, I like to be a confirmation level trader, so I confirm a lot. And basically at this specific point, when it's moved down here, the odds of me taking a sell from up here is very low. I'm not going to take it off of an imbalance and the last buy to sell. Now, that's not to say that this isn't perfect, right? This is Wyckoff. Highs were liquidated, right? Multiple highs were liquidated, even these. UTAD, the breakdown happened. You really didn't get a test, right? This is still area that's good for a test. And some of you caught this because you're okay with this being in line with your strategy. For me, if something moves too far, which in this case it did, I'll either look for buys back up into it. So, you know, from right here, there were actually fantastic buys. I think I caught a buy either in here or in here on this liquidation that took me right back up to here that I, you know, partialed, probably partialed here, or I just left it locked in, and then it broke me even slash took me out with a small profit before going lower. And some of you sold right into this distribution and did amazing on it, right? So big moves or small moves are basically just in line with something that had occurred in the past. In this case, you could explain the gold one by this distribution that hadn't been tested yet and then got tested, which is also in line with what I spoke about earlier today, which is not all schematics will play out right there and then. Some will take some time to play out, and again, you need to formulate a strategy around that. I understand that, you know, not every schematic that I see am I going to be able to catch, right? And you guys know yourself that because Wyckoff happens everywhere, I literally can't get involved on every single schematic. It would literally make me go fucking insane, right? But let's look at USD CAD really quick. Bam, big move. Very big move. All right, sure. So, I mean, the easiest thing you can do is zoom out and ask yourself, we can already see that this definitely came to mitigate something, but what it was doing was taking out all the liquidity above all this shit right here. There was a ton of people selling into this, tons of people selling into this, right? There was just a lot of people selling into this, grabbed their liquidity right above it. As you can see, underwent a mini Wyckoff in here, never really tested it. So, if anything, this is probably heading to some area inside of here, right? And you can go and refine those, but it's probably heading somewhere inside here to accumulate, to come back up to test these zones, or coming even lower to grab liquidity here to hit another point somewhere further to the left. I'm not going to look right now, to hit that point, taking the liquidity here, and then come to test this zone here, right? We always understand that we're trading with footprints. Now, why did this move happen from that specific area? Again, we look left and there's always going to be a reason for it. Doesn't mean you'd caught it. Yeah, like I wouldn't have caught this because there's nothing here that warrants a good supply or demand zone for me, right? It reached up to reach into something here, right? We can go and take a look at exactly what it reached into. We could probably even find it if we were to refine. So let's just take a look on a 30-minute, right? So if we just zoom in here. Okay, so some kind of Wyckoff occurred here. Seems like it was just reaching. Yeah, so if you look at this last up move before the down move, you know it's reaching up into this, more into the 50% of it because it got tested at the open, right? So it was just reaching up into this. That's what it reached into. Again, if we get lower, we could probably find exactly where that reached into. Maybe a 5-minute here, right? Keep getting lower. So in this case, still nothing. You can see it reached right up into there. So maybe even a 1 minute. Oh, fuck, we can't get that low. But the point is, if you went and refined that, you'd probably find the exact area it wanted to reach into and why it reached into there. That doesn't mean that we would have predicted that, right? I wouldn't have been able to catch this, is what I'm trying to say. Some of you would have, because it's in line with your thing to set a pending order at an area like that. But for me, there was no point to look for something like that. More likely than not, I would have also been looking at this as an overall Wyckoff schematic, heading up, looking to buy in here, but then looking for the sells down. So if you watch this, highs being manipulated, finally a structure shift, sells where? The last up move before the down move, either here or even the mentfx block, comes right into it, sells. Where do you partial? Partial, right? Partial and break even, you get sought the break even, but you've already made a shit ton of money off that partial, right? This is why smart money is fantastic if you manage your risk. Even though we got liquidated technically on this trade, there's still an opportunity to get in. And I would have expected this to keep breaking down to here and then to take out this entire trend line of retail traders. That didn't happen, but that's fine because you could have still been a part of this movement, right? All the way down. And if you keep on studying the inside price action here, you'd see that even if you miss this, right? You have this moves down, you have these move downs. This comes to test some area in here. I probably wouldn't have been watching this. No good or valid supply or demand zone on this specific time frame. If you went and refine that, maybe there's something there, but then it breaks down again. You know, last mentfx block here, there's probably a setup in here. If there isn't, breaks down again, new mentfx block, you have a setup in there almost guaranteed. And if you don't, it got tested right here. And even if it got tested right here, you either partialed or broke even after it took this demand zone in this area here, and then got stopped at break even, or stopped after partialing on this move back up, right? So even though this move moved in a way that's technically like unprecedented and even I wouldn't expect, right, until it came here, this move overall was something that you could have still been a participant on, right? So always ask yourself, how could I have gotten involved? How would I have gotten involved? And be honest with yourself. Like, there's no point to look at this and be like, yeah, I wouldn't have done, you know, this or this, even though you probably would have, right? If you would have sold this, right, go and look inside of this zone and see if there was Wyckoff. If there was, then tell yourself, okay, that would have been a -1. That's normal. If we go back to my journal real quick, right, you can see, so pink is, purple just means end of a week. So this was just this week right here, right? Start of the week, XRP-USD -1. Gold, -1. Gold, plus 4.3. Gold, plus 6.25. Gold, plus 4.78 with partials. All that stuff is done. Gold, plus 6.2. Gold, plus 0.8. Gold, plus 1.25. Bitcoin USD, -1. Gold, -1. Right? There's going to be -1s, and you should be honest with yourself about them because they're part of a trading system. But when you start to actually look at how those results look after the fact, you realize how little these -1s matter. Especially if you're a trader that doesn't partial as aggressively as me. These 4.3s or 6.25s or +4s are like more along the lines of +10s, +15s, and +20s. Now, I don't do that. You can, of course, go and refine your own system for that. But the point being, right, this is like maybe a 50-50, if anything, or maybe like a 70-30 win rate. And still, you know, what's the overall? +4, this is +10, about +15, 21, about 23, 22, 21, 20, 19. So about +19 RR in a week, right? So hopefully that kind of shows you guys how little the -1s actually matter if you stick to a system. And how even when something like this occurs on USD CAD, as it did here, I can't explain to you the move. I mean, I can. The move took the liquidity here, tapped into this, and then came lower. But I can't like go in and tell you specifically how I would have caught this because I myself wouldn't have. Now, that's not to say other traders in this group wouldn't, because some people would. It's just about how you've refined your own system, okay? What do you typically do when the market first opens? I don't look at it until like Monday. And then I look at Monday, right? I'll just have a bias preset, or I'll have areas that I'm have alarms or alerts set at, and I'll just wait for price to tap in, or I'll trade the intermediary price action as it goes to tap into that area. So for instance, if I had this area as a place I wanted to sell, I will look for the liquidations lower, the breaks, and then I'll start looking for ways to get into buys at all these points on the way up to here, right? Something like that. What's your risk management? It's enter, partial at structure, break even at the partial, and then partial along the way at other areas of inefficiency. Let it run, let something always run pretty much into a zone that I believe it's going to run into before it turns around. Do what you want. If I were you, you were looking for a long position based on Wyckoff and institutional levels. 2 to 3 days uptrend until midweek reversals. I spend so much time watching, learning, taking notes that I frequently fall asleep at my desk. Now tells voice. Nice, man. Section, I'm guessing you're saying 1 here. Section 1 and 2 are all you need to be consistent. Thank you. But yes, it's true. I mean, like, you guys could have been already consistent off of just the stuff on my YouTube, right? Joining is going to give you a lot of a better opportunity to, you know, work with a group, work with me, work with a ton of markups and actual structured learning. But again, like, you guys have what you need to be consistent. It's up to you to go and refine a system, and it's not always easy to go and do that because there's a lot of work to it, especially if you're new. It's very hard to go to a new chart and just like start somewhere, especially if you go and start replaying. Like, it's very hard to look at this and just say, what the fuck would I do, right? Which is why you have to basically take it 1 step at a time, and as I always say, baby step it, right? Section 1 and 2, yeah. Which time frame my bias has to be if I want to operate in the 1 minute? Any, but if you're using the rule of 30, times that by 30, so 30 minutes. So literally go and find 30-minute areas and confirm them with a 1 minute chart, right? If that's what you want to do. Now, I myself don't even employ the rule of 30. Why? Because I know that at this point, I don't have to get onto the lowest, the rule of 30 time frame chart to see this happen, because I could be on the second time frames and catch the distribution here, the accumulation here, the distribution here, accumulation here, and the distribution here, all the way through, because I know how I'm going to manage that risk, right? So I don't need the rule of 30. But as a starter, feel free that if you want to be operating on the 1 minute, use a bias from a 4 hour to a 1 hour to a 30-minute refinement to a 1 minute entry criteria, right? You can build something around that completely. There's so many ways to build an entire system with what you have here, right? Recognize that even the mentfx block, the concept of it, even though it might be taught somewhere else, I don't know how that exactly works, but that concept in itself, with confirmations of mini mentfx blocks within larger ones, is a system within itself. You can make an entire system off of it, a really good one too. I haven't tested it that deeply, but I've seen people that have literally created entire systems based off of nothing but the mentfx block and do very well doing using it, utilizing it. What do you count as a break of structure personally, wicks or body? Wicks, always wicks, because even a wick is showing you that there's still there's a movement into a certain direction, right? That's what you have to realize it. Fucking right. Do you class wick as BOS? Yes, I do. Hey Ment, I hope you're having a good day. Can you explain to us how we know a higher low will be swept? It's all based on bias, based on higher time frame and understanding, right? So for instance, go open, because I look at a lot of gold. Let's get rid of all this stuff on it. How do we know if a high or low is going to be swept? Well, what was I doing in here? Let's get lower. I mean, the best way you know if a high or low is going to be swept is by having a bias, right? Since we had this distribution form, you know this distribution, especially in this higher area of interest, is more likely than not coming to sweep this, not to respect it as an area of demand. So you know that it's coming to sweep this, maybe to come sweep this, maybe even to come sweep this. So you know this movement here is part of that. And now you know that if this is distribution, then more likely than not, a movement that might come up is not going to come up to sweep this, but instead it might come up to distribute and come to sweep this low, this low, this low, and potentially all the lows here, because the bias is that we still, for the last few weeks, wanted price to tap into here or here before giving us bullish price action, which means all of this, in my mind, wants to be swept if we churn bearish, right? So it's literally knowing which highs or lows are going to hold or knowing which ones are going to be swept is all based on a bias, right? If your bias is that buys are going to happen from here, honestly, when I thought buys were going to happen from here, I thought that after this distribution right here, there was going to be a sweep of all those lows. Now that didn't happen, right? But because of the way I understand my management, because of new demand zones that are forming, I know where I can look for potential buys and be technically hedging or counter trend trading my overall bias of all this getting liquidated. And despite that, do well on it, right? Then it shifts again. Again, the bias is still going to be to come and finally take out all the lows. Now that doesn't happen to happen. It could easily come right back down, accumulate here, and I would look for short-term buys to take me into partials or new supply zones, or I'll leave a little bit on to potentially do this, right? Because it can easily still continue to reach up into these zones, right? And it's not that we don't know exactly what's going to happen. It's not like we're sitting here going, oh, it could be bullish, it could be bearish. But what we're actually doing is we're using and utilizing the way price is moving and our own criteria for management to dictate where and how we're going to get involved and what lows are going to be swept or not, right? For me, I honestly never know which lows or highs are actually going to be swept 100%, right? I honestly thought that the buys in here would have came to sweep the highs here, right? So when price was here and I took a buy, even though I thought it was going to sweep this, I still partialed at highs, at areas of supply, and then it reversed, which means I could still make money on that move up without it sweeping the highs I'm expecting it to sweep, because I'm not holding it expecting anything to happen 100%, because I understand that we're nothing more than footprints, and when liquidity or a zone is met counteractively by smart money or whatever, then a number of two things can happen. Either they continue to meet higher objectives, or they use the liquidity at that area that we just met where we've partialed to take price in a different direction. And if they do that, then our bias can change with the smart money orders, because guess what? We don't have the money to move all the markets. We're not at risk for having those markets move the way they do, so we can just wait for smart money to do what they want to do and be a participant of that. Hey man, I hope you're having a good day. Can you explain to us how we know a higher low will be swept? Oh yeah, so I just went over that. Hopefully that made a little bit of sense to you. For me, the answer is you can't ever exactly know. I mean, sometimes I have a much higher percentage probability idea, like 60 to 80%, that I know a higher low is about to be swept, especially if it's equal highs, especially if it's in an area that is technically undergoing Wyckoff, right? There's things you can add on, and if you've looked through price in the past, sorry if anybody cannot see this, by the way, just so you know, it's not actually blurry. The candles, you can't actually see the candles here. I'm just showing you guys it from that standpoint, but here you go. I'll zoom in a little bit. What is the name of your intro tune? I have no idea. I found it on some free. I had a guy make it for me, and then he kept using like jazz music and shit, and it was like terrible. So I just found it off of like a free non-copyrighted music thing. And I just said, just use this, and now we got the intro that you guys know and love. All right, let's delete all these brush tools. It gets so ugly when I talk. Jesus. Rishi, you don't. Yeah, exactly. So Jazz, good answer. That's exactly how it is. You react to it. Exactly. So we don't know, but we react to it, and we react quickly, and we can anticipate with probability, of course, as always, right? The people that sold here were already anticipating a raid of this equal lows, this, and potentially even a movement all the way down to here. I know some of the people that sold this are still holding this sell to actually come all the way down into the areas here. Now that's fine. But that means that I could still probably be a buyer in these zones to take it back up to the zones before that drop occurs, right? That's fully fine too. You never know which highs or lows are about to be swept. In this case, I would basically, if you were to ask me what high or low is going to be swept, this one or this one, I would most likely say this one. Why? Because we need to grab some liquidity before going lower, okay? Now, if you were to ask me, is it this one or this one, I'd say this one. Why? Equal lows, grab that liquidity to grab the new liquidity here to then grab the liquidity here. Right? It's a game, it's a game, and it's a story. You need to understand what the story is, because money is constantly being manipulated and transferred, right? Back and forth between weak and strong. How do you do that? You anticipate, right? And then we can get an idea about which ones want to be manipulated or taken first. And that's how you know oftentimes what lows or highs are going to stick and which ones are going to be taken. How do you know which supply or demand zone to use? Do you look for a 15-second Wyckoff inside of a 5-minute POI to get into a trade to confirm? How do I know? I confirm them. That's it. You literally, one of the coolest things that you can do. I was actually doing this to try and explain it to someone that I was talking with. If you go to any market and just kind of go back in time, you know, just tap the replay, just go wherever, and just go into it. Oh, whoops, sorry. Just go into price and ask yourself, okay, where's the unmitigated zones? Okay, well, ready? So you have, bam, sells from there, sells from here. These are all just unmitigated. This one already got mitigated, so just this one's good. And then potentially you could go down to these ones, but this is the only one really, and you could also anticipate this one, right? So at this point, all of these are valid for sells. Now we just have to wait for the confirmation. Okay, so let's just play price a little bit. Just watch as these zones form and how they get mitigated. So keep going. Okay, great. Technically already, this is a 4-hour chart, so on a lower time frame, there's going to be a supply zone right in here as well. So there's going to be mitigation here that you could be potentially a part of. Now, looking at that, there's probably zero mitigation of any sort that happened in here that you could have been a part of, right? It's very easy to see that, so it doesn't matter. But now this also becomes a zone where potentially you have mitigation to go higher. Now we're in here, so what can we do? We can look for those sells on lower time frame to go into here, to look for buys, to go into there, right? We're formulating a bias, and now we can expect certain highs to get liquidated and certain areas of inefficiency to be filled, because all we're doing is we're creating a story behind what's going on. You don't know what supply or demand zone is going to hold. The only way you do know is with a confirmation, right? And with an overall bias. And again, as we get to a daily or a higher time frame, these zones become much more in confluence with a potential structural play or something of that nature, right? So watch this a little bit, right? There you have it. It sells down into here, or it might take this out first and then come down here, but you can see there are cells that come down into this area. That's fantastic. Now, at that same point, right, what do? Coming to reach above these highs, most likely, right? It's more likely going to take these highs than it is going to take these lows, right? Almost 100%. Now, that doesn't mean it's going to happen. It can easily just go like that right now if it wants to, but based on the story that we're telling ourselves with this being the unmitigated zone, let's see this get liquidated. Now, if it starts going down, where can it go down to? Demand zone, right? Now, this one, we don't know if it's going to hold. We're not just going to go like this and say, all right, here we fucking go. You know, it's all good. I hope this works, right? You're not going to do that. Instead, you're going to go and confirm that if that's what you want to do, at least under my way of trading. So here we go. We come up here. We begin to have Wyckoff. We distribute from that area, and there you have it, right? We come down into that zone. Now, there's going to be accumulations inside of here on lower time frames that you could be a participant of. And as you can see, those accumulations in here had a run all the way into this supply zone right here, or this wick of the supply zone, right? All these are supply and demand zones that are being held and mitigated and give you opportunities to be in, manage, partial, BE, whatever it is, right? There is no way to know what supply and demand zone is going to hold. Wait, did I just go too far? What happened here? How do you know which supply and demand zone? Yeah, okay, yeah. And like I said, I don't look for any given time frame inside a time frame because I understand how I can get involved. And even if a time frame gives me an area this big, I know that there can be distribution here that I catch the partials, break even, distribution here that I catch the partials, accumulation that I catch the partials here, that distributes, that becomes part of the larger time frame distribution that liquidates it, breaks, and then looking to play off there, right? And if you can't do that, rule of 30 it, and that whole thing will look like this to you on a rule of 30. Fantastic, right? Check out the rule of 30 video on YouTube, yeah. Jazz, okay, thanks. I've seen people like Hunter FX who know which level will be swept. I mean, you can anticipate the level to be swept, but and it's much easier when you know how liquidity is formulated, especially if there's a shit ton of liquidity, like equal highs, you know those are going to be swept, and they do get swept. Equal lows, you know those are going to be swept, they get swept. Equal lows, pretty much, you know they're going to get swept, they get swept. No equal lows yet, let's not sweep them yet. Equal highs, you know they're going to get swept, they get swept, right? Follow this down, potential lows. So if this is an accumulation, then we know this is going to get swept before it keeps going lower, right? If that's what it wants to do. No, it doesn't sweep them. It actually comes up really high, comes and touches the supply like we said it would actually, sweeps this, right? If this is an accumulation, it's going to sweep this, right? I'm not looking at this on a lower time frame, so I have no idea what's going on the lower. So I don't know how these confirmations actually look, but we sweep lows. We have lows, we sweep the lows. We have finally more highs, we come and sweep the highs, right? I mean, it's a question of where's the liquidity lie. If you can draw a line like this at some highs, there's almost an 80% chance that's going to get swept, right? So if you see this in one area and you see this in another, you know that this is going to get swept before this, most likely, like 80%, 90% of the time, right? Delete some more of these brush tools. Damn, it gets so ugly. There we go. But hopefully you guys see this. So basically, one of the ways you can backtest is literally go into a chart, go anywhere, and then ask yourself, where are the zones that can get mitigated? There's this supply zone. Actually, it just got mitigated, so we can get rid of it now. Okay, there's this supply zone that can get mitigated right now. There's this supply zone that can get mitigated in a second. There's this demand zone that can be mitigated, and then just watch price for those areas of confirmation, right? There's some mitigations. Now, what did that mitigation create? Equal lows. So, more likely than not, and there's equal highs here, it's probably, I'm not saying 100%, but it's probably going to distribute soon, either here or maybe a little bit higher to come and take the lows here. That's what it wants to most likely sweep, right? So it distributes and comes to sweep the lows, right? Just like that. So if you, like, you know, if you can draw a line, more likely than not, it's going to come sweep it, and then you can be part of understanding that bias. So hopefully that made some sense. Hey, so if I marked off an area after Wyckoff for a test, like an order block, or area of imbalance, but it just wicks the top of this area without fully mitigating it and going in this area, is that point still valid or not? If I marked off an area after Wyckoff for a test of something or an area, but it just wicks the top, I mean, if it wicks it, that's a wick, that's still mitigation. And it's up to you whether a mitigated zone counts as an area you can use or not, right? Sometimes if I see like Wyckoff occur and it hasn't broken structure yet, but it's created this nice move here, at this point where it broke right here, I would still expect this to be a fine buy, right? Because even though it's mitigated once, I still think there could be orders that come in to mitigate one more time and then come take out highs. Now, after it creates these lows and then creates a new high and then comes runs them, the odds of me using this area have become less because it's in line with the way I like to view market and the way I like to trade it. Now, for my own confluences to get into sells or buys, I like to have unmitigated zones for the confirmation of Wyckoff. But once Wyckoff is confirmed, I'm okay with taking a zone that has already been mitigated for a limit or a market order, right? So again, and that's all up. That all came from me just backtesting, understanding how I want to be involved, right? If you guys watched my backtesting video, you saw that some of the areas we bought from off the confirmations were areas that had already been tapped, but the areas that we used to confirm the Wyckoff were areas that were unmitigated, right? So you just need to, again, like I said, backtest the living shit out of these concepts and understand what way works for you. And like I said, if you go to any market and just find the unmitigated zones with price right now, you'll see price tap into them, give you mitigations, give you confirmations, and you can ask if that's something you were happy with trading. Honestly, so glad I found you. So many other scams. IMO paid $2,000 for a course, complete scam. I'm a fucking idiot. It's okay. It's all part of the learning process, man. But thank you. I appreciate it. He doesn't know for sure, though. Yeah. If Hunter FX knew what is going to happen next, he would be a billionaire. Yeah. Marlo, it's hard to word. I don't want to promote his stuff either, but it will be better if you just saw it. Yeah, it's like I just showed you. It's if you can draw a line, usually that area will get liquidated. You can draw a line, that area will usually get liquidated, right? And you can do this over and over. If you can draw a line, usually that area will get liquidated, right? Exactly, smoke screen. Overview USD CAD, please. Thanks. I'll do a outlook on it if everybody else wants one on USD CAD as well. I haven't looked at USD CAD in like ever, so I'd be happy to look at it. But bro, just trust me. No one knows what's going to happen next. The markets are not about certainty. It's about creating a positive expectancy model and following it with discipline. Yeah, exactly. So part of what I said here, right? Like I can go in and draw a bunch of lines and tell you what's going to be liquidated, right? Like lines liquidated, right? Lines liquidated over and over again. But that doesn't matter. If you know what zones are going to get liquidated, it doesn't really matter unless you have ways that you know that you can get involved to go and liquidate those zones, right? Just because there's price that does this doesn't mean that you're ready to go and liquidate the zones, right? It could easily begin this, tap into an actual zone that's important here, right? Undergo its thing, liquidate the actual zones that it should liquidate here, and then get you into the moves that liquidate all those highs here. This is kind of what happened on gold, but the other way around. Before it closed, right? It created this whole thing, created those equal lows, but never really took it until it underwent a distribution, then dropped right through them, right? How is smart money involved in crypto? The exact same way. There is no difference whatsoever. You should watch my newest video that I just put out on public YouTube, because I go over metals, so commodities, I go over indices, I go over crypto. Wait, do I go over crypto? Shit, did I not? I think I did, but it works the exact same way. You have areas, you have expectations in those areas, you get down lower to confirm those areas. Those areas are then confirmed. You are able to take partials and break even on trades. You are able to take partials and break even on trades. You're able to take partials. This was actually a 5-second trade. Here you go. You're able to take partials, break even on trades at highs that you know are going to get swept because there's so many highs that then come to break even, right? The exact same way. Everything still functions the exact same way. Nothing is different. And risk management. Yes. Okay, thank you, bro. No problem. Can you give an example of a sign of weakness versus a spring? Well, yeah, sure. So let's just do it like this. Here's a unmitigated supply zone. Here's a unmitigated demand zone. Okay. Price comes up into it, liquidates highs, does this. That's a sign of weakness. Okay. Price comes into a demand zone, does the same thing, but flipped. That's not a sign of weakness. That's a spring. Why? Because we're anticipating accumulation. Watch the section 3 part, because I talk about reaccumulations, redistributions, and the thing that people get wrong. And you'll recognize that what matters is a bias that you already have preset, and this is only the confirmation of that bias. So, you know, you wouldn't confuse this sign of weakness with a spring if you had this zone that you were going short from, because if you were considering this a spring, then it's time to expect that, right? But that's not what we're expecting. We're expecting this. So you know it's a sign of weakness, and then there's another sign of weakness because it's heading to this lower zone, right? So hopefully that made some sense there. Let's delete all this stuff. There we go. Fantastic. So that's how it's involved in crypto. Hopefully that made some sense. Kimmy, if that doesn't make sense, I'd be happy to go over a few more crypto examples down the line. No problem at all. But the way that we look at any market, which is, you know, kind of a 3-step rule if you really think about it, bias, supply and demand zone, confirmation is all you need for anything, including stocks, including penny stocks, including any of that shit, right? My newest video would help you a lot with seeing that, because I kind of went over like 5-6 different markets in different sectors to show you how that works. Can you do another backtesting session? Yes, I will for you guys. Sure. How do we apply all these concepts on NAS? So also a market maker, just, you know, a lot of the time when we go in and look at a certain and we look at a certain concept at play, or we even look over a certain entry criteria, even just now when I looked at that Bitcoin on the 5-second and the 5-minute, all those setups, that's pretty much a backtest session for you, right? Almost every webinar has a little bit of that, where we go in and we just talk about exactly how you would have gotten involved, and it's always relatively similar. So if you go back and just kind of accumulate all those together, it's almost its own backtesting session, if that makes some sense to you, because my backtests are going to be the exact same, as me going back and talking about something, right? Like if you guys saw the Euro USD monthly and daily backtest, and again, I did the monthly and daily to show you time frame doesn't matter, you'll see that it was nothing more than trading this setup over and over again in areas, right? So how do we apply all these concepts on NAS 100 where the NYSE open becomes extremely volatile, taking liquidity typically in both directions? The same way. Watch that video. I did it on US 30. I'm guessing US 30 is just as volatile, just crazy maybe, but it moves the exact same way in regards to institutional structure, testing those areas of structure and transferring weak to strong. Just because there isn't sporadic moves this large, where you have a large structure put in place, right, and price comes all the way back down to test structure and all this stuff, doesn't mean that you don't have the same thing happening on lower time frames in the NAS, in the US 30, all that stuff, right? Because the NAS or US 30 is going to look like this to you, right? But inside of here, when you zoom in on a lower time frame, there's going to be what? Right? The same thing over and over again with Wyckoff and areas coming into demand zones, liquidating these zones. That could happen at opens, could happen at the end of the day, whenever it really wants to happen, right? There could be an accumulation on Bitcoin in minute one now on a demand zone. What do you think? Yeah, I mean, I'm bullish on Bitcoin. Again, this could be very similar to what happened on Euro USD. If a lot of you remember, there was that 1 week where I was super bullish on Euro USD, and every buy I took, I mean, it all went into partials and profit, but it never held and it kept falling. This could be the thing here. Watch for the accumulations. There will be accumulations, but manage them properly. And that doesn't mean you're gonna do well on all of them. There was actually, if you remember, I actually had a loss up here on Bitcoin, and there was actually, you see this little X, there was a loss in here because I was looking at a buy off of, I think this schematic. I think I took a buy right here. Oops, that's the sell. I think I took a buy right here. Wait, how's it keep doing the sells? What's going on here? Buy. Bam, fantastic. So I think I took a buy right here, looking to partial at least up at these supply zones, and then take it much higher to all these highs and highs and highs and all that stuff, and it just took me out, right? And that's fine.